The end of another week. Here we are, enjoying a bit of tipple and some heated shrub juice, trying to solve the world's problems, talking about things we know nothing about. As usual, don't take us too seriously. If you do, maybe you need to have some of this fine stuff,
or consult a neurologist,
and the world will be back right side up. It's been an interesting week. A lot has happened. We've got a lot to discuss, and I'm sure there'll be quite a lot of opinions on what's right, what's wrong, how it should be done. But before we get to that, what are we drinking?
Yeah, you seem to have found a new way to constrain blood flow to your brain.
Oh yes, yes. What's up with this?
Wait, what is
so no, help us understand this. A couple of weeks ago, you were like, you don't wear socks because it's getting warm, and now you've got layers upon layers. Can you help us understand this?
Well, the thing about layers upon layers, as you say, the idea is what type of wool it is, and this is a 110, so it actually breathes more, and it's for summer. And the cravat is good actually for blood circulation.
Really?
Surprise, surprise. And for summer, yeah, it's very useful.
Like
so this is a very
in the event that
this is a very this is a gentleman's way of dressing in summer.
Okay. We'll have to
we'll take your word for that.
And having tea.
And you got a haircut.
Yes, I did.
What happened?
Well, I got some complaints from some of your fans.
Well, at least you listen.
Well, anyway, and so what are you having?
Kericho tea
Again?
from
East Africa.
East Africa. So yeah.
Is it
we'll
cravat
start
from
a-
East Africa?
No, it's not. It's French, but
Oh,
it's
French.
useful.
It's French for tie. Just a fancy word for tie, isn't it?
Oh, yeah, it is.
Okay.
It is.
Yeah.
So that's what I'm having. I haven't had it in quite a while. So I thought, you know what, let me start again on my teas. And on a summer day like this, I think tea is just appropriate.
Well, it's not days anymore because the bars are back open, and
Yes.
we can go out for a tipple, and we can have Friday drinks at night and be productive during the day.
That's
Fantastic.
true. As for us, we are having the original Glenmorangie. It's a drink very close to my heart. Yes, we'll let you pour today. Carefully.
Only into the little.
Glenmorangie is famous for being one of the original purveyors of single malt whiskies. They've been doing this for 170 odd years now. This particular one, which is 10 years old, is matured in bourbon casks. So basically, they distill it. And you know, when whiskey is distilled, it's actually a clear spirit. It's white. And they then put it into casks that come from America for it to mature, and it takes on the color and a bit of the aromas and the flavors of the bourbon and of the oak, which is toasted. It's 10 years old, but an interesting fact that I picked up from the book. Remember? Follow us on YouTube, comment, and you might win a book at the end of the season. One of the interesting facts I picked up from the book is actually the age statement on a bottle of whiskey refers to the youngest whiskey in the bottle.
Yeah.
I've often wondered.
Yeah.
So thanks for that.
So a single malt doesn't actually come out of the same pot.
Okay.
It's actually a single malt is itself a blend.
Okay.
Of different whiskies from the same distillery, and the youngest of which gives the age of the bottle.
All right. Okay. So when you say 18 years, what do you mean? Or 10 years in this particular, what does it mean?
So
Having
the-
said that statement.
So there could
What
be
do you
any
mean?
number of different whiskies that came out of the Glenmorangie distillery that were
Alright.
blended in this bottle. But the youngest of those different whiskies
Was 10 years.
was 10 years.
So this could very well be 15 years.
Some of the
Some of it.
Yes.
We just don't know, but we know that the youngest was 10
10 years
years.
old.
Oh, okay. Interesting.
yeah, maybe you should put your hat in to win a copy of the book.
Nah,
We might convert you.
absolutely not.
Well,
I
at
think
least you
it's-
sound like less of an ignoramus when talking about whiskey. Which
Well, I mean, this is nice to know information, but it's not useful for me. I think
Well,
what's more likely to happen with time
So what will
is
happen
you
when
guys
you-
are going to move this way rather than
Well, good luck with that.
moving that
you
way.
think we're going to get less wise with age? What are the chances?
It's a very sweet one.
Less whiskey with age.
No, I doubt very much that that's going to happen.
No,
I
it's
think
of
if there's
honey.
going to be any transition, it will be in that direction.
Okay, children.
Okay.
Notes of honey and a bit of citrus. This is a particular favorite of my father-in-law and I. We've shared many a special moment over this.
Cheers, Shumba.
Yes, Shumba. Anyway, matters at hand. The rate has gone rampage. Oh, it's gone crazy.
Well, I wouldn't say it's gone crazy. I think it's just the market doing its thing. After all, the inflation numbers came out, and we had a month-on-month inflation for September at 5%, which is quite high if you compound it for the per annum. It's quite significant. So, and I think that inflation, the official numbers anyway, I don't think they're massaged in any way. I think that they are reliable, but I think that they are a lagging indicator. So what's happening on the power market is probably closer to the mark than what we see in the official CPI figures, and that's what it's just a reflection of money supply.
I mean, I've been asked to swipe at a rate of 180, 185 in some shops. I'm hearing stories of 200. I'm not sure what your experience is, gents. Is this where the rate is?
It would seem so. It would seem that it's anywhere from 180 to 200.
So we've crossed
And
the
it's
100.
not.
We've crossed the 100% premium mark.
100% premium has been crossed, I think, 2 weeks ago, and it does not look like it's going to calm down anytime soon. It's more likely to increase. The rate is more likely to increase.
No, I wouldn't actually agree with that
just for a
assertion
second,
about.
just maybe to assist some of the viewers to understand what is the 100% premium mark. Basically, now the difference between the parallel market and the official rate is now more than 100%. The parallel rate is now more than double the official rate.
Yeah, so I don't necessarily agree that going forward we're going to see this accelerate or get significantly worse. It is a function of Treasury and how they behave. So if they are alarmed by this, and clearly there's evidence that the state is alarmed by this,
Yes, they arrested people.
and they stop printing, which is the primary cause of the movement, then we might actually see the rate remain flat.
Right.
So
Okay.
so unless you have high conviction that we're going to see continued printing, then I don't think it's necessarily true that the rate is going to continue to deteriorate at this rate.
Okay. Oh, let me answer to that. There are two things. So the rate movement, money supply has been increasing astronomically. We can agree on that. But what has happened is there's always a lag on money supply, actually. The rate moves maybe 2 or 3 months after the money supply increments. So what we need to calculate, and I'm sure we can do this, or maybe not calculate, but use logic, that the pent-up energy, Zim dollars, that's already in the market, does it justify a rate of 170, 180? A lot of people think that what justifies, when you look at just the current amount of money supply in the economy, the rate should be higher. And one way we could do this, and I was hoping that you would help us here, is the stock market cap. Do you think that the stock market cap at a rate of 200, does it justify the rate of 200?
So valuation is like beauty. It's in the eye of the beholder.
Come on. We're not going to let you get away there. What's the number? What's the number? What's the total market cap?
So look, in the last 30, 60 days, we've seen the market cap reach 5.96 billion, which in my opinion is overvalued because those are the levels that it was at in 2016 when we had a much more functional and, in my opinion, bigger economy, right?
And the whole of Old Mutual.
Well, yeah, and Old Mutual and PPC were listed at the time. But if you, but when the rate moves the way it has done, the market then loses value,
Exactly.
not in dollar terms, but in US dollar terms. So call it 5.2 billion. I still think it's overvalued at these sort of levels, but that's my opinion.
Well,
So the point I was making when I was talking about valuation and beauty is to say that I think that we can all build models based on logic and thoughtful assumptions that reasonable people can look at and say this makes sense, that makes sense, but the market is always right. So in as much as it's interesting to try and wrap our brains around why is the rate at 175 or 180 or whatever. I think that the first thing that we should do is accept that this is where the market is. That's what the market is telling us. And we could wake up a month from now and it's pulled back or it's gone further. But it's an indication that the dollar is devalued.
Okay. Can I pose another question or look at it from a different perspective? What we are trying to aim at, it's not to question the market valuation of the stock market, but to look at parity, to say that an investor who is somewhere in London or in New York, would they come in to Zim if at current market valuation compared to elsewhere? And we could use the stock market or we could use grain. What's the price of grain in Zimbabwe and what's the price of grain in?
Well, guys, I think we're going down a rabbit.
And also that
would be academic. That would be academic. Even if the valuation of the market came down to $1 billion, if I was sitting in New York or London, sadly, I would not invest a penny in this market.
No, but I think we're having a wrong discussion here, gentlemen. Okay, so the issue is perhaps the rates run, and you're saying perhaps it's running because of the money supply. There are a lot of Zim dollars.
No, I don't think we differ on that.
No, yeah, well, I'm still making my point.
Okay.
So there are a lot of you're saying there's a lot of Zim dollars chasing not a lot of US dollars, and perhaps there's some agreement on that. But okay, the significance of this 100% premium mark is also the heavy impact on viability of exporters.
Absolutely.
So we are now looking at exporters getting around effectively 80 cents in the dollar. Perhaps we might have a hangover segment to explain to viewers why a dollar of exports is now 80 cents in real terms, but that means they've lost 20 cents of margin. Will they continue to export?
Well, viability problems, as you rightly articulate, become quite an issue. That for the last year, we've seen exporters actually increasing their exports, and they could take the hit. Some could, and some couldn't. I think Rio Tinto and a number of other companies actually couldn't take the hit. But I think now, if you think about it, I don't think that there are many exporters who can take a hit of 20%. 20% is like their margin, if you think about it. Because, internationally, the market is actually quite competitive. And I think this is a good time for us to look back and think carefully if this was actually a good idea.
Okay, but before we start thinking.
Yeah, and I wouldn't go into the specifics of the margin. The way I would think about it is that no matter what you export, whether it's horticulture, flowers, or chrome or platinum, the bottom line is you have a cash cost per unit of export. And as the power market and
so you're going to go into this rabbit hole.
That's exactly what we're saying.
No, but what I'm saying is, at some point, your cash cost is going to be higher than your revenue.
That's the point.
So there's a supply shock that we're heading into.
That's the point I wanted to get to. So, so are people going to continue exporting, or is the number of US dollars on the market going to shrink?
So I don't think we've witnessed that yet. I think what's been driving the power market is money supply growth. But I think that as the premium keeps growing, there's going to be a supply side shock, because once the cash cost of an export is higher than the revenue the exporter is receiving, there's going to be a perverse incentive for them to stop exporting.
Exactly.
And then that money that's feeding the official system is going to start drying up.
Exactly.
So the pressure for importers to rely even less on the auction and more on the power market is actually going to go up.
And so it comes back again to the money supply issue, where I was saying, do you think that the current money supply does it justify the rate? Because now what you're building, into is the expectations. Because remember, the market also has expectations. So the market is saying,
and perception becomes reality at a certain point.
And this is more than perception. This is real expectation, because the market expectation now is if there's a supply side shock, what does it mean?
Okay, so you guys are basically in agreement that you're saying we haven't, even if money printing were to stop now, we haven't felt the full extent.
Absolutely.
There's an overhang that's still coming.
That's still coming in.
And you're saying, well, while we're dealing with that overhang, and as we deal with that overhang, the inflow
supply
of dollars,
side shock
Yeah,
is-
there's a
is gonna-
supply shock coming.
And the market is also building expectations on that.
This is very gloomy.
Yes,
Very
which is
sad.
why
But
we're drinking
I-
whiskey and not
what-
tea.
But I don't understand why people think it's gloomy. Please explain to me why it's gloomy.
Our lives are going to get harder.
It is what it is. If you print, what do you expect? And what the market is just saying is, let's make our decisions based on the reality and the expectations.
But we are people. We're not the market.
Well, I'll tell you-
We are pretty worried.
Okay, I'll tell you where the market has actually been better than most people. Is that over the last year, we've actually seen FCA accounts actually going up. It's because they were actually expecting this. A lot of exporters, a lot of people were actually expecting that this supply shock would come. So it was better for them to just hold dollars. And we saw an increase in the number of dollars in the FCA accounts from, I think, 800 million to about double that over a year. It's because people were actually expecting
So
the
you
supply
don't
side shock.
buy this narrative that increase is because of increase in confidence?
Okay, this is a good time to go for a break. People are getting arrested these days. I'm not going to be one of them. A couple of minutes, we'll be back. We'll top up our drinks, we'll powder our noses, we'll go to the little boys' room. So just before we went to the break, we speculated about the supply of dollars going into the future, but we're also looking at hard numbers about the supply of local currency in the recent past. Clearly, there's been a lot of money supply growth. You've talked a lot about it. You've written about it. What's driving this?
Okay, so I just want to change your mindset a bit, because when we talk about money supply, sometimes we don't really capture what's actually happening. The value of an exchange rate is determined by the amount of foreigners that want the Zim dollar, right? Because I think usually people look at it the other way, but actually no, it's the amount of foreigners who are out there looking for Zim dollars.
Compared to how many Zim dollars are available?
Well, because that's the supply, right? The supply is the amount of Zim dollars. So if you increase the supply of Zim dollars, foreigners are thinking, well, this is now coming cheaply. So why should I have more of them when I know and I have expectations that there will be a whole lot more of them? So that's why the rate then loses value. So that is quite critical, that the exchange rate now moves down to why do people demand Zim dollars? Now, the real reason why people demand Zim dollars is because they want to get onto the stock market, and the stock market is quoted in Zim dollars. So foreigners are thinking, hey, that's a good return there. And I really don't care how much Zim dollars are in that particular market. I want those Zim dollars because I want to buy Delta, I want to buy whatever counter is in there. Or Zimbabwe has a higher interest rate than the home country. So somebody's thinking, oh, that's a higher interest rate and I'd love to enjoy that. So, and the bond or the TV or whatever corporate bond is quoted in Zim dollars. So a foreigner will exchange their US dollars for the Zim dollars so that they get into that particular asset. The other reason is tourism. People always forget this. I always say that in the UK, if you go into the high streets of the UK, you find that the Bureau de Change would have Zim quoted exchange rate. Because there was a time when you had lots and lots of UK visitors coming into Zim, and they would demand Zim dollars. So that's where the demand for Zim dollar comes from, where people are willing to exchange their US dollar or Chinese or whatever.
So we should just ban people transacting in US dollars. And then everyone will want some dollars and the rate will be fixed.
I think if you do that, you'd actually make the situation worse. So what has actually helped ameliorate the situation is that the central bank has actually accepted us to trade in US dollars. Because the problem is, think about a tourist or think about the stock market investor, is that they want to come to Zim, so they exchange their pounds for Zim dollars today. And then by the time, people plan, right? They come to Zim in a month's time. and the Zim dollars have lost value, right? So a tourist now reckons, well, if the Zim dollar is going to lose value, then I would rather just keep my pounds, keep my US dollars, and just trade in US dollars. Similarly, with somebody who wants to invest in Zimbabwe, so that they hedge against the currency depreciation. So the big problem we have is we keep on increasing the supply of Zim dollars.
How are we doing that?
Okay, so you've got two reasons why we're doing it. First is the fiscal deficit, which we now have. There's
So
no
the government is
surplus.
spending more money than it's earning.
It's
But
spending more
Mutuli
money
says he's
than-
got a surplus, and the surplus works.
It's not coming out in the numbers. We've looked at the numbers, and there's actually now a deficit, and they've been increasing the number of TVs. And this is as of July. We don't know what's happening now. We don't have the latest number, but as of July, we've seen the TVs that are coming into the market actually increase. And then in terms of
Well, what's wrong with that? You've got lots of countries in the West.
No, he's explaining.
that-
He's just,
No.
well, let him finish explaining on my
Wait, wait,
supply
wait,
issue.
Yeah.
That's a rabbit hole.
No, it's not a rabbit hole because if you're saying this is coming from the deficit, and you've got countries like the US, like the UK, a lot of countries in Europe are running deficits, and they're not suffering runaway inflation. They're not suffering significant devaluation of their currencies. So why is that happening here?
It's a good question, and I want you to go back to my earlier argument, and I think your framing is still wrong. My earlier argument is the exchange rate is determined by the number of foreigners that want your currency. So when you look at the US can print, but the number of foreigners who want the US dollar is a whole lot more,
Okay.
right? So that's why you find that the US dollar will have some sort of.
Okay, can we go back to the two things?
No, I think just so that he gets the framing right. I think
Yeah. Okay. No. Fair enough.
fair enough, right? So you find that certain governments, because nobody wants.
Can we stay on point?
Yeah.
The
Okay.
two issues.
So fiscal deficit
So the government is spending more money than it has, so it has to print money to cover the gap.
to cover the gap.
Okay.
And then second is the quasi-fiscal activities at the central bank.
What does that mean?
Okay, so a lot of our exchange rate losses, because the exchange rate is fixed, and there are exchange rate losses in there, and those are being carried by the central bank at the moment.
What losses? The rate has been the same for a year.
So
Official
there are a lot of debts that we've picked up, not just this year, but for the last 5 years, that we picked up at 1-to-1, and now the rate
The
is
so-called
at-
legacy debt.
legacy debt and Zim Bank, a number of debt. Yeah.
And now lately the auction backlog.
Exactly. And now lately the auction backlog.
But how does
And
this,
what-
how does this increase money supply? Because this has got nothing to do with the local economy.
And these are debts
it's-
that are not being paid anyway. So how do they move
Fantastic.
the needle?
Fantastic. It feeds into the expectations. So what happens is when you look at the central bank balance sheet, whenever these exchange rate losses are there, it builds up in what we call net domestic assets. So your net domestic assets are increasing, they're ballooning, right? But you're right, we're not paying any of this. But people's expectations are at some point in the future, you're going to have to monetize these losses or this particular deficit. And that feeds into your exchange rate because people know this. And it has happened before. We saw the debt assumption bill, when was it? Chinamasa in 2015. And what happened to the rate then? Right? So people have these expectations that, okay, you haven't monetized it for whatever reason,
But it's there.
but it's there, and at some point you're going to have to monetize it.
Okay. All right. So let's go back to this fiscal deficit. So we're spending money we don't have. Where are the big places we're spending it? Okay. Because look, for most of us, legacy debt and whatever, it's out of our control and we don't understand. But you saying Mutuli and George are spending money they don't have. Where are they spending it?
So what we know is what we read from the newspapers. The data is slow in coming. So we tend to then get the actual data maybe 3-4 months later. But what we know is infrastructure spending. A lot
Bridge
of
Road.
that. Yes, exactly.
Guayashangani Dam.
A lot of that, we are paying that. We know that we're servicing some of our interest, right? Foreign interest payments that we have to pay. We know that grain, we've been buying grain. I think the latest that came out is we've already paid about $35 billion worth of grain
Through GMB.
through GMB. And we know that GMB carries a subsidy as well. We know that We know that power, we carry
being subsidized as
subsidies.
well.
We know that.
But what's
Zupco-
wrong? What's wrong with subsidies?
So,
I mean,
Well, I can tell you what's wrong with subsidies.
Okay,
Subsidies
please.
create perverse incentives. So,
you guys are full of big words today.
so basically, take fuel for example, right? When it was subsidized and the price was denominated in Zim dollars, we were selling it at a discount to fair value. You created a perverse incentive for people to buy fuel in this jurisdiction and sell it into the region. Our fuel consumption went through the roof, and there were queues everywhere. But today, for the most part, people are paying. Actually, our fuel is more expensive than fuel in the region, the US dollar denominated fuel, because of the taxes. So there are no queues at service stations that sell fuel in US dollars. And people who are transitioning through Zimbabwe by land have an incentive to buy as little fuel as possible in Zim because
and
it's more expensive.
invariably we
right?
use less currency.
And when the prices are higher, the demand is lower. So we're actually importing less fuel.
Okay. Yeah. Okay.
So when you,
But I think that's a very good.
But what
point.
about our poor people? Let's go to Zupco, right? We've got these poor civil servants. They
You know
can't
the
afford.
shocking thing about civil servants, and I think people often forget this, that at the present moment, a civil servant, to buy fuel, they have to change their Zim dollar salaries into US dollars so that they can buy fuel. So I think they're some of the worst hit with what's actually
But that's
happening
why
in
we
the
give
economy.
them Zupcos that are subsidized.
Well, and that's what he's saying.
Yeah, but
right?
so
That's the cost.
I think you're conflating subsidies and welfare for society's least and most vulnerable. Because if your concern is there are people who are economically disenfranchised, they have no to very little income. How do we ensure that they subsist in a way that preserves their human dignity? That's a different question from are subsidies clever? Because if you ask me, subsidies are not the most efficient way of helping those people. In fact, they end up benefiting a different demographic of arbitrageurs and buccaneers and
And
criminals.
But the other issue is how do you finance your subsidies? So people use Norway or Scandinavian countries as an example, and they finance their welfare state using taxes, high taxation.
Government's own money.
So, but in Zimbabwe or a lot of the African countries, we finance the subsidies by printing money.
Or through the exchange
Eventually.
rate. Or through the exchange rate.
Eventually, it's printing money.
Yeah, and those subsidies, sadly, don't end up helping those people that you're concerned about.
They actually make them worse because there's
Explain
a
this.
bigger inflation is a tax. So if you debase the currency in which you're subsidizing people with, next year you've debased that particular currency. So the buying power of the currency is way less than it was the previous year.
Okay, this is a fancy explanation. I'll give you a simpler way to think about it. So I'll come back to my example of fuel. So when fuel was heavily subsidized in this country and it was cheaper than everywhere else in the region, right? It made much more sense for a combi driver to spend all day in a queue, fill up his combi, drain the fuel, and sell it on the black market. So guess who uses combis? And guess what life was like getting around on a combi during that era? So were the people who we were trying to help with this fuel subsidy, did they benefit?
No.
Exactly. So when you create subsidies, you create perverse incentives, and the people that you're looking to help end up suffering the
Are
most.
worse off.
So the price of fuel should have been whatever it was.
Should have been market.
What then would you have done about this?
So
this
you would have
poor
been
person
better.
who needed to get to a
So
clinic
you're
or-
better off actually identifying these people, society's least and most vulnerable, and saying, okay, you know what, you need to get around to some extent for your subsistence. We're going to give you a handout of $10 a month or whatever it is.
We're going to give you a coupon that you give the combi guy, and he comes and claims the money.
I'm of a different view. I understand that, but I would not give them a coupon. It's equally the same. What I would do is I would reduce the taxes that they pay. So if
But
you
they
look
don't-
But
at
if you're unemployed, you're not
pay
in a
them
position to pay any taxes.
no, you are in terms of your VAT, right? In fact, you pay a lot more taxes. Your marginal
No, but you don't have money
tax,
to spend.
Your marginal tax is actually people do spend money. So if you don't have money to spend, then why are you traveling on a Zupco bus?
I need to go to the clinic.
There's a local clinic. You see, and this is the problem.
I don't know this
Yeah.
guy. you're going to get shot on the street.
So you think a sick person can just walk to a local clinic in this country.
I think anyway, trying to create an exception.
Anyway, gentlemen, okay.
Policy by exception is never
Anyway,
what you should go with.
but look, we're having
So I would reduce the taxes, and if you tend to find that. So for example, the 2% tax doesn't affect you and I. It doesn't affect the rich in our society.
It affects
I'm
me.
not rich.
It actually affects the poor that you were trying to help, because they're the ones who actually transact.
You don't pay the
part of that.
2% tax?
No, I'm saying that when you look at your total income and you look at the 2% tax, and
The percentage of your spending that's actually
it's far lower than the vendor, who has to transact a whole lot more, and they get taxed with that 2%, and then you have VAT. So what I would do is I would actually drastically reduce the taxes, and on certain foodstuffs I'll even reduce the VAT so that it's way lower, especially in our poor societies and what they consume, so that the VAT on those particular products is way
well,
lower.
basic commodities, basic food commodities don't have VAT. They're not fetchable.
Okay. Gentlemen, interesting discussion. Interestingly, we're having it beginning of October. And it seems this discussion is perpetually happening at the beginning of October. If you look over the years, in 2007, Jock took over price monitoring. You had people getting arrested for trading currency. Sound familiar?
It does.
RBZ suspended inter-account transfers. I think that was in 2008 or thereabouts. There was a time, I think, 2010 or somewhere thereabouts, Old Mutual was suspended or nearly suspended. The story goes on. 2018 government, first week of October, 2019 government empowered RBZ.
In fact, the first 3 days of October come with news.
So what is it about this time of the year and prices and currency?
Remember what I said about pent-up energy. And I know that people argue that it's because this time of the year, that's when our forex
Receipts
in-laws are lower.
Inflows, not in-laws.
Shumba, I don't know this guy.
But if you really think about it, we know this, and this happens all the time. But I think that the major reason is because during the year, there's always this pent-up energy. If we didn't have a backlog, I kid you not, October would have happened and it would have been normal, right? But it's because we do have a backlog.
You're talking about the auction.
The auction.
Yeah.
Because we do have a backlog. So October becomes a heightened month.
What is it about
Because-
October?
No, because everything that was pent up before, all our problems.
Why in October? Why not in November? And why
this
not in
is-
September?
This is what I'm trying to say. What I'm trying to say is, while it is true that around this time, our inflows, our forex inflows tend to be lower. And I am saying that there's specific years, we didn't have this problem during the GNU years, right? We didn't have this problem in 2016.
Oh, we were a US dollar economy then. So how would you have a problem?
In 2016 even, we didn't have this problem. And I'm trying to explain that the reason why we have this problem is because you've got these nibbling problems at the beginning of the year. And by the time you get to the 10th month,
But why the 10th month? I think
no, because
I think
you're
you're
building up.
No, but I think there's some things that you're missing. Right? I think you're missing is the beginning of the fourth quarter. It's a change of seasons. We're moving from spring. We don't admit there's spring, but we're moving into summer, which is an important agricultural shift. I'm not sure what else, but I think these
But
things
then
have
why is it in 2016 and 2015 it didn't happen?
because we're eating what we killed.
Exactly. So it's not the change in season, because we tend to plan our change in seasons. But if you've got a problem, if your car has a problem, and it's been nibbling
why does your
for
car
10
always break?
months,
Why does your car always break down in
because
October?
after 10 months, what do you expect should happen? And I'm saying,
So, okay, so basically maybe to put it differently, what I think Tinashe is saying is that if you've got all these issues and then you have this dip in October, then it can be catastrophic.
Okay. Well, you should have said that.
well, that's exactly what I'm saying.
So you've got this dip. Currency dries up. We just got out of the tobacco selling season.
Absolutely.
Farmers are cash flush. They've just received their money from.
There's Zim dollar cash flush. So they're looking for real goods
Real
which
assets,
cost,
yes.
which have an input component, and so the demand for currency goes through the roof.
Yeah, they're planning their next season.
Absolutely.
I don't think that's the issue. Then you're not quite getting it. So in statistics, right? Remember what we do is we disaggregate the correlations and the causations. That happens. Farmers around this time, that's exactly what they do, and they've been doing so for the last 100 years.
But
So there's nothing unique.
But what Rufaro is saying.
What is unique?
What Rufaro is saying.
It's the straw that breaks the camel's back.
What Rufaro is saying, and I think you're actually in agreement, is yes, these things always happen, and this is traditionally a low point for our currency management. But if we've got all these other
If we
problems,
haven't been managing it well to begin with, then the most likely time that the problem will manifest is in October. I don't think we disagree.
I just think that from a correlation and causation thing, we're not quite getting it. But it's going down a rabbit hole.
I think so too. Maybe this is a good time to take a break. And maybe you can lecture us during the break about correlation and causation. We'll be back in a couple of minutes. It's a good one, isn't it?
It is.
I agree.
Anyway, okay. So look, we're in a mess. Goodness knows where the rate is going. This is
Can I
this is a
change
perennial
that?
problem.
I beg to differ, and quite strongly. People say that often, that we're in a mess. We're not. We're not in a mess. It is what it is, right? And
So not a. It is what it is.
Okay. So
It looks like a mess.
when you look at business cycles, right, you look at it as a correction. So we're not in a mess. We're in a correction.
Mhm.
And we need to start using words like that. If you've had the exchange rate at fixed rate of 85, 86,
Mhm.
and you see the power market going haywire, it doesn't mean that you're in a mess.
Mm.
It just means that there's a problem you have not addressed, and the market is just correcting you. That is what it is. So a depression.
Sounds
an
like a
economic-
really horrible
Okay.
analogy.
and
you know?
economic depression is not a mess. It's actually a correction. You need to go through
It
that.
reminds me of,
so that the market actually corrects.
You even sound like Mutuli as you're saying that.
It reminds me of this horrible analogy that there's a billionaire businessman in the US, Mark Cuban, that he so when Trump was elected and a lot of people found this really depressing, he says, no, it's not as bad. It's not as bad as you guys think. It's like, think of it as being a cancer patient and you're going through this horrible chemotherapy that's going to make you better. and
So economies are not chemotherapy.
Can I ask my question?
You're a runner.
Mhm.
If you start breathing heavily, what does it mean? Does it mean you're dying?
No,
What's the system telling you?
the system's telling you that you're pushing it too hard.
And what is it trying? What is it doing?
It will slow you down.
And what is it
Okay.
doing? Why are you breathing heavily?
Trying to stay alive.
Yeah, and the point I'm trying, it's a correction. You're breathing heavily because the way you were running was wrong. There was something faulty with the way you
Can
were
I ask
running.
my question?
And it's a correction.
Tinashe, can I ask my question?
Yeah, please.
that
Go
okay?
ahead. Go ahead.
Do I have your permission? No.
Yes, please.
Okay, thank you. So, given where we are,
Okay, I
So-
think you had a
so-
question. So I'm going to
some words of advice to.
What is the end result of this correction?
No, can we please?
No, fantastic. That's
Are we
fantastic.
going down a rabbit hole?
No.
Well,
Your question is clearly in the oven. It's not yet.
No,
baked.
my
so you can
question-
address mine while you while you put your question together.
Because we've got limited time. Right. What should be done? So what does
So-
Julie need to do? What does JPM need to do?
So I would answer and say that since it's a correction, we need to do nothing. It will solve itself, and he can now answer my question, which is what is what is the end result?
So the correction is, for example,
Okay, you guys,
if you look
you guys
at,
are going to answer your own questions. Right? So
I'm going to ask you. I'm going to answer your question, right, and also tie it in with Rufaro's argument. Is
Did you just
when you look at 2008,
tantrum? I thought I was
if you want to give it, but look at 2009, right? The market corrects itself. Is you get to a stage where if you continuously insist that people must use 85 or 86 or 87, whatever the rate is, people will find alternatives, and that's the correction. Until a stage will come where people will not use your Zim dollars. That's the correction. That's the end result, right? So, and it comes back to our economic theories, right? Where I come from, which is an Austrian economic thought, is we are saying you have been building up all these subsidies. You've been doing all the wrong things for the last 2-3 years. What we're experiencing is a correction because it has to correct. So this is where it's actually very painful, right? It's like when you go,
it's like food poisoning.
Yes. Actually, that's a brilliant analogy.
No, it's not. No, it's not.
No, it is. Your body, you must now take. There's certain medicine that you
want
must
to get arrested.
There's certain medicine that you must take, and it's going to be very painful because this correction is necessary. But once you correct, now you could continuously go on a
So what
battle.
do we do? What's that correction?
Liberalize the market. Liberalize the markets. Totally liberalize the markets. But know that the minute you liberalize all the markets, it's going to be painful. Inflation will shoot up. So if you insist on having a Zim dollar, just know that if you liberalize the market, inflation is going to shoot up. You're going to be in a worse position than you were initially.
I think
what happens after you've corrected is you then get into your steady state rate of growth. And we're not yet in our steady state rate of growth.
Look,
and that's
guys,
why the correction
guys,
must happen.
I think you guys are just in a very heavy mood today.
heavy.
Yes, heavy. Look, we've identified our problem is we're spending too much. We're spending money we don't have. We need to stop spending the money.
But then you still need to go through the pay
Yes.
of the money that you spend.
But let me continue, right? We need to stop spending the money. We've discussed here in the past that our problem is we don't have the discipline to stop spending money we don't have.
Absolutely. Absolutely.
So we're faced with a simple choice. Do we maintain the currency and be disciplined, or do we give up the currency?
No, I actually beg to differ with you on this.
I agree.
I think that yes, we have a long history of profligacy, of spending more money than we take in and running deficits. But I actually think that if we changed the policy framework, we would actually be able to spend at the current level and more and raise money legitimately in international capital markets.
But how much more do we change the policy framework than to enshrine it in our constitution? Our constitution says we cannot operate a deficit greater than a certain
20% of the previous year.
And yet we do.
Yeah, so it's not about just changing the laws. It's changing behavior, right?
That's what I'm saying. And we've got a history of failing to change behavior.
So the first thing that we need to establish is the discipline. So if we've decided that we've had food poisoning, or we're going through...
Let's not talk about food. Okay, if you're overweight and you eat too much, and you eat too much,
correct.
and your problem is you cannot reduce how much you eat, and you cannot get up in the morning to exercise. You have a choice. Either you are going to whip yourself, wake up in the morning, or you're going to hire a personal trainer and give up that control of what time you wake up to someone else.
In fact, a better would be a drug addict, that they have to go into an institution. And the only thing you're doing is you're introducing the discipline. It doesn't mean that they will lose weight or that they will.
No, but gentlemen, I think
So the discipline, what you do is
I understand the discipline argument quite well, but don't you think that the problem is it's a mindset. It's a problem of perspective, right? So if so let me put it this way. What's the size of our economy, GDP-wise?
$17 billion.
You know, call it, I think the last rebasing took us to as high as 25 billion.
No.
Okay, whatever it is.
Again.
X.
It's $17 billion.
X. I don't think it's material at this point.
Whatever the number
Well,
is.
he kept on insisting.
Okay,
that
no, I'm not
every
insisting.
day.
But anyway, let's moving on very swiftly. Right? If you are looking at the future, the next 5-10 years, and you are thinking about growing the economy at your typical, 3 to 5, 6, 7% rates over a 10-year period, right? That's not incredibly ambitious. But if you were looking at something truly transformational, taking our economy from where it is today to being $100 billion economy, $150 billion economy, the level of spending and the size of government projects today would look like chump change. They wouldn't matter so much. If we change the framing of the problem, if our problem was, no, we want to grow at 3 to 5%, which is what I think it is, which is the discussion you hear when you hear Treasury make pronouncements about the future, right? If they were saying, look, that's not what we're trying to solve for. We're trying to solve for an economy that's 100 billion in size in the next 10, 15 years. And they were thinking along those lines, and they were taking action along those lines. I think that they could spend even more money and raise more money. But
what we're saying, Rufaro, is you're planning to run an ultramarathon. You want to change your mindset to an ultramarathon mindset from an overweight mindset. But you can't walk past a piece of cake. Deal with that problem first. If you can't ever walk past a piece of cake, you're never running an ultramarathon.
So here's the thing, like if that
What's
person,
your answer? What's your answer to that?
Yeah, so here's my answer. Like if that person has an option, right, to take a pill that will increase their metabolism by 10 times or 100 times.
Yeah,
right.
Call those steroids.
Right.
You know what happens? They work.
Right.
Yeah, but you know what happens, right?
Right. So, and I think that's part of
your burnout will be.
So I think that's
catastrophic.
I think that's part of the problem, where we are thinking in terms of a developmental economy in the 1960s or 1970s, right?
No, we're not.
That's because we're talking about natural resources. No. I'm not talking about you two. I'm talking about, if you look at government policy and you look at the emphasis on natural resources and agriculture, right? It's developmental. It's about exploitative sectors. It's not about where the world is today. It's not about 21st century.
Well, I think you're speaking to. So where I totally agree with George, but where I buy your point, and perhaps we need to talk about this, is from a leadership perspective. I think we do have. We need to dream bigger.
Absolutely.
We need to be well capacitated, and I think that a lot of it has to do with ideology. So the sort of growth that you're looking at has to be premised on a particular ideology. Because if you're a socialist, there is no way you're going to get it to a $100 billion economy. But to his point is very important, because if you do exactly what George is doing, then you tend to find that your correction is quicker. So it's a question of, does the correction take you 10 years or 20 years? Or the correction takes you 1 year or 2 years? And then you get into your mindset.
So the reason why I don't like thinking about it in terms of us just going through this crucible where, we are forced to change our ways, kind of like what we did between 2008 and 2009, is that there is a history of countries like Argentina where for decades they get to a point where they've completely lost the market's confidence, the economy goes into free fall, then you have a new government that says, you know what guys, we're going to do things differently. And then they fall into the same trap.
If you do exactly what George is saying, you won't fall back. If you do exactly what you are saying, then you will fall back like Venezuela and Argentina. Because your solution is a pill. His solution is, no.
Change your lifestyle.
Change your lifestyle. Be very disciplined. Actually enjoy the correction.
Yeah, but
so that's why, to me, it's not a sad moment. Because it's recognizing what the problem is, recognizing that you are actually overweight, and you need the discipline. And all you're saying is you're going to have to outsource the discipline bit. So no matter how motivated you are, you need to outsource, you need to have accountability for the discipline, because unfortunately you're obese.
Which is why it's now
ingrained in
you.
Which is why transcendent policies solve the discipline problem because discipline is not easy. Just look at the global. I mean, do you know that today in the world there are more people who are overweight than people who are malnutrition, right? So it's not so
that's his point.
No. So what I'm saying is discipline is not a. It's obvious that disciplined people will do better.
His point is a lot of people are not disciplined and miss that discipline bit and want to go for these grandiose ideas and forget that the first thing that we need to do is actually acknowledge that we are obese and actually say, you know what, the missing link is the discipline. And because we are undisciplined, and it's actually very difficult to be disciplined, the first thing that you need to do is to outsource the discipline bit. That's why, in my worldview, a currency board is just you actually acknowledging that you're not disciplined.
And there I was thinking you were supporting me.
No, I am, because I'm saying I'm not disciplined, so I'm going to outsource.
But okay, I will agree
issue.
with you.
And then once I've addressed the currency issue, then I'll still go with you in terms of the correction, because the correction must happen, and it's a very difficult process. But once you've done the correction, then I move into your.
So I agree with you, but I think we're not going to go into the rabbit hole of what solution, whether it's a currency board or whatever it is, best addresses it. But I agree with you that I think that we have demonstrated over the last 40 years that we are woefully incapable of managing a local currency. And
you're giving it a code,
and
appeal is not gonna help.
And we should just give up. We just say, you know what, we can't.
Exactly.
And use rands or US dollars or something else.
Yes, exactly.
And then whatever our problems are, forthwith, they are not currency related.
Related. They're actually manageable.
And you know what? If your problem is that you can't control how much you eat, having control of the kitchen, you must admit that having control of the kitchen is maybe not a good idea. And let's give the kitchen to somebody else, and let's eat meals at the correct time, in the correct quantity,
and portions as the chef
determined by someone
decides.
else.
Absolutely.
We're in agreement, and maybe this is a good time to round up the show. But one last word before we go away. I mean, education is a pet subject of mine. The minister's changed.
Okay.
Whoa, what are your thoughts?
I think we can't get worse than it was before.
I've heard that before. And it did get worse.
Well, actually, to your point, I think really it's a source of hope.
There are human beings who support a soccer team called Arsenal.
No, but it's a source of hope. But
I stopped supporting Arsenal.
Looking at one of ZFN's publications this week, they had a quote of the day that said, hope is good for breakfast, but it's bad for supper. So, yeah, let's hope it goes beyond hope. We're looking forward to some positive changes in that area. But otherwise, we hope that we've inspired some thoughts and some discussions between you and yours, and that you have a pleasant weekend. Stay safe. COVID is real. Otherwise, just be good. If you can't be good at it.
Cheers.
Cheers.